Welcome to the Trading Lounge and the day ahead report. And here we're looking at the S&P 500, and essentially we're moving into a wave 4 that should pull back 38.2% of wave 3, which will leave us in around the 1437 mark through here. And we should see that in a wave 4 can be complicated as well, especially when wave 2 is reasonably simple. So we can expect some sort of sideways correction here. The other thing that's probably worth noting as well is because obviously coming into Christmas the volumes are going to be lower as well, so people not holding positions over the break. So yeah, look, it might be worth a bit of a short there as well on the Dow Jones as well. It's the same as well, so we can pretty much expect it to come back into the 13,300 here, but also lower into subgroup 2 here, the 13,272 being quite pivotable in that space there. So yeah, further sort of weakness there, and that would translate into the Australian markets as well. The ASX CFD here should essentially follow the US market. The reason I also say that too is because the base metals were weaker as well. So we should see some sort of A, B and C coming back down through here. Essentially this is the top of a third wave here, this is the fourth wave here, and we're looking for a fifth wave up through here. And I can count this okay through here, but this move up here is in 3 waves, so this is the one that's sort of thrown me out a little bit. So we just need to be a bit mindful of that. But you know, if this tests lower into here and then regains support on top of the 46.30, then you can go along from that point there. But just be a little bit careful around here. I can see there's 5 waves from here up to this point here, nice little 1, 2, 3, 4, 5. I can see that's quite easy. So we have some type of correction here, and because the base metals will be weaker, as copper is down, nickel seems to be reasonably stable with aluminium, but yeah, weaker there, and also a bit of a bounce on the US dollar. So the bounce on the US dollar is obviously pushing stocks down, and the base metals are folding with that as well. So yeah, there's going to be selling pressure, so just be a bit careful. Thursday's got a habit of opening higher and trading lower through the day. If it trades lower through the day on lower volume, then you know it's just a corrective move down. There's no sellers there as such. But you know, coming into Christmas is you know, just those sort of holiday lower volume things. So alrighty, let's have a look at the metals. So this is copper here on the 4-hour chart. It's broken the 365 here and gone below wave 4 here, and we can see that it's still extending down through here. So we can expect this to move further down as well, in terms of probably the 61.8 retracement level is something that we need to consider, which is down around this area here. So this is the strongest part in the structure here, so we can expect, you know, more to be added on through here, which is also going to affect the Australian dollar and the materials sector as such. This is sort of a larger sort of triangle pattern. So when we look at the LME copper here, this is a daily chart for the UK London. So so you know, as you can see here, we've got some sort of triangle pattern happening here. Well, it's reasonably sort of clear through here. So triangle patterns are normally 5 waves in terms of the 1, the 2, the 3, the 4 and the 5 through to here. So basically an A, B, C, D and an E wave here. So we could actually get quite a strong move to the downside from here. So just need to be aware of that, but we'll follow the wave structure down, and in following the wave structure down in this sort of area here, I can see that you can see that it's picking up speed through here. So it's got, you know, it's got the beginning, the middle, which is occurring now, and the end there. So really that's sort of the strongest part of this whole structure through here, about here. So realistically that's halfway to that point there. So there would be another, you know, movement beyond that as well. So what we can expect though is some stabilization around the 360 for the short term, but eventually that will become the resistance there, and we'll see this move down further. And gold is in the same vein as well. So really base metals are following gold to the downside, and we see this coming down further. This is the medium level through here, so we can see that we should end up below here in terms of, we were tracking these little 5 waves down, and then we've got our little A and a B and a C, the counter trend, and the third wave is really showing a third wave personality as well. So this, we should see this continue further down, and that's why the copper will be there as well. The oil market essentially is moving to the upside, and it's more in tune with stock, so it's moving with the indices. If, however, it takes out this top here, then we need to count it like this here, as I'm counting it here. We need to count this up for 1, back for 2 here, and this is all part of a third wave coming up through to here, so there'll be a 4th wave and a 5th wave in line with stock at that point. So that's how we'd be looking at that. Yeah, all right, let's have a look at FX. This is just the market correlation here, and we can see that the S&P 500 and the euro and oil are all in one bunch, and we've got gold and the Australian dollar in the other bunch to the downside there, even though we're expecting, well, it is already at the moment, the S&P 500 and the US, the euro will be correcting to the downside. Oil still moving to the upside, it's the strongest. So anyway, there we go for that one. So with the US dollar index here, we were looking yesterday for to come into the 79 area through here and have a bounce. So the bounce that we'll see here should be in at least 3 waves. So it's a little bit hard to work out, but there'll be 5 waves in here. So this would be because we've got 5 waves in the opposite direction from down here, that means it will get a 3-wave counter trend and then another 5 up through here. So we can expect higher US dollar prices, just a little sort of zigzag situation here. So this higher US dollar here will put pressure on stock indices to the downside, and we can see the mirror opposite of the US dollar with the euro here on a smaller time frame, 30 minutes here, doing its ABC to the downside, much like stock is in terms of a little 5-wave structure in through here. So we should see a B wave in here and then down for a C wave through here. So further softness to come in through here, and the Australian dollar has been, this is a 2-hour chart, so it's been weaker longer, and this has got something to do with the base metals, of course. So looking at this as a wave 4 here, but it's still weaker to the downside. I find this actually quite a good thing, because this corrective pattern really is a little bit the same as all the previous ones as well. So we just need to give it time to settle into support, wherever that may be, down at the 144 or even a little higher through here. But under 105, then the bias is weakness, and so you need to be on that side of the market if you're trading. So you don't go long under a number like this. If you're going long, you have to wait for it to sit up there. It's just safer, and you just get better. If you do that, you just get better results over the long run. But look, as I mentioned, I find it actually a good thing that, because we were looking for the first high above the level, and that's come into play, a bit like the ASX 200 above 4,600. So we've got this first high above the level, and now it's coming back and it's checking. You know, so far we've got 3 waves coming down, so there does appear to be more to unfold down through here. But that's good if it does that, because if it comes down and checks and finds support, then if it builds to the upside, then we've got a solid trade off here. But in the meantime, you need to be on the same side as you need on the right side of the closest largest number, and also in the direction of the trend. And it's been trending down for some time through here. So yeah, just be on that side of it. Yeah, so that's that really. Alrighty, so with our sort of robo trades for today and tomorrow, as I mentioned yesterday, I've just sort of been putting less and less out there and winding them down into the Friday there. So we'll just continue to do that. Also, just wanted to point out too that over the holiday period, the currencies, the gold, oil, and S&P, all the Elliott wave stuff for the forex and the S&P 500, gold and oil, that will stop on the 24th and resume on the 2nd of January. But the robo trades and the morning report won't be coming back online until about the 14th or 15th. I need to check on that of January. So yeah, that's our plan so far. But we'll put that in writing and send that out to you. Alrighty. Well, good morning and good luck.